There is frustration on Wall Street with the federal government's bailout plan. Early show national correspondent Jeff Glor is at the New York Stock Exchange with more on that. Good morning, Jeff.
Hey, Harry, good morning to you. The markets actually surged a bit last week in anticipation of this announcement. Then, when the announcement came, the Dow was down 382 points, an indication that Wall Street was less than impressed.
This is a dangerous dynamic, and we need to arrest it.
With Wall Street searching desperately for clear skies, they found more clouds.
I think that the concern was the lack of specificity, the lack of detail. It just seemed very vague, and in a way they should have waited a little bit longer before sort of unfolding it, if you will, and announcing it.
The Treasury's latest plan to fix the battered banking system, which could cost $2 trillion, was met with confusion. Many unsure how it'll work or when.
As costly as this effort may be, we know that the cost of a complete collapse of our financial system would be incalculable for families and for businesses and for our nation.
The basics laid out by Treasury Secretary Tim Geithner are this. To shore up banks, the Treasury is creating an investment fund that'll buy up to $1 trillion in toxic assets, move to a so-called bad bank. But they're not sure who exactly will own it, some combination of public and private money. The other trillion will be aimed at increasing lending. Again, more auto loans, student loans, and credit card debt. Get the system spinning like it's supposed to.
Obviously, many of these details still have to be worked out. But today, it is Wall Street goes to Washington when 8 of the nation's top banking executives will be testifying on Capitol Hill. And I would suspect, Harry, you will hear some very pointed questions.
Jeff Glor at the New York Stock Exchange this morning. Thanks.